Some patterns are hard to ignore. When you see the power of interest rates, you know that this is one thing that the entire financial system relies on. Without historically low interest rates, the market will fall. This time will be no different. The question is, when will this happen? You came here for the truth, so let me unveil that for you. Today, we are going to look at interest rates, we're going to look at volatility, we will look at wealth inequality, and so much more. Let's begin. This is the most important chart of this video, and I've covered something similar before, but I'm happy to see that someone has taken the time and actually done one better than I have. And you can see here what has happened in previous instances. Every time the Federal Reserve increases interest rates, they crash the market. The shaded line represents a recession. What's important to note is that every single time the market is unable to sustain the interest rates that were previously there. Basically, every single time, the interest rates need to get lower and lower and lower. And so they brought interest rates down to the floor. Ever since, they have been slowly increasing. But according to this analysis, according to this indicator, which I believe is highly accurate and is the most important indicator out of all of the hundreds and hundreds that I've shown you, this is my primary indicator. Based on this, interest rates only need to rise maybe one or two more of these little steps that the Federal Reserve takes in order to begin the next financial crisis. I am not personally saying that this market is going to crash tomorrow. What I am saying is that this indicator, which has been 100% accurate, is again flashing warning signals that we are entering into this territory. And every time we do, the market crashes after, that this could happen. One of the other points I want to make is that during this time frame, after this financial crisis occurred, you can see that the Federal Reserve decided to bring interest rates down to zero, but in fact, it brought them below zero in the shadow rate. I've had a video about this before if you're interested in taking a look at it. A lot of people are not aware of that. But it is important to note the extreme level that they have gone to support this system. Interest rates cannot get nearly as high as they did before. So if interest rates were at around 5%, the font is a little blurry, but it's just above 5%, I had used the number of about 3%. But according to this chart, according to this analysis, it's actually lower than that. But I would have to say, let's be fair, it would have to be somewhere between 2 and 3%. We're almost there. So we'll have to keep our eyes closely on these factors. It's so important, okay? They're suggesting that it's going to happen in the second half of 2018. All right. Now, looking at the Fed funds rate itself, I wanted to show you this because I can take that chart back further and look at the rise that happens and how perfectly this indicator really spells it all out for us. I think I'll leave it here. We're basically looking at the mid-1980s up until today. Number one, they're increasing interest rates slower than they normally would, and they always do it too slow. But they're unable to get to that point. And remember, you saw this sort of line that's sort of putting a cap up on top of how high interest rates can go before the next recession. To me, this speaks volumes. This tells me everything I need to know about what's going to happen in the near future. Some people would look at it and say, well, it's not true. But it continuously happens. The Federal Reserve was here during this time frame. The Federal Reserve was here during this time frame. The Federal Reserve was here during this time frame. And yet we had a recession that followed. Do not stick your head in the sand. This could very well happen. And it doesn't happen for the reason that most people think. They think, well, the Federal Reserve, the big banks, they're going to come together. They're going to fix it. I had somebody in the financial industry, a VP, and this individual told me that they're going to have to fix the problems. They will. And he was 100% convinced. But they never did. And here we are today. That was several years ago now. But here we are today. Nothing from the previous financial crisis has been fixed at all. Nothing at all. It's much worse. So surely we're going to encounter the same problems. Even if nothing else comes from, some way out in outer space, we're still going to encounter the same problems. Don't go anywhere. Make sure you watch part 2 of this video. I'm going to get into wealth inequality, lots of good information. Click on the link in the description of this video to take you over there. See you there.